Hi, in today's video, I'm going to talk about 5 key performance indicators that you can track and analyze for your bookkeeping clients. And if you've never seen my face before, my name is Morgan, my website is FinePoints.biz, and my goal is to help bookkeepers get organized. If you want more videos about bookkeeping, definitely hit the red subscribe button below to get a video every single week. So the acronym KPI, Key Performance Indicator, is something I've been hearing about the last couple years. I'm not sure if it's actually been around longer, but it's a way that business owners can kind of set goals or track key parts that are going to help them be more successful and more profitable. And so KPIs for a business owner can span a wide variety of topics. So like, how well do you retain your employees? How fast do you fulfill your orders? How is your customer satisfaction? Things like that. But because we're bookkeepers on this channel, that's what we're talking about. We're going to do financial KPIs. So this is kind of a newer topic to me, so I feel like I'm learning right along with you guys. And within my research, there was tons of different KPIs, and some of them were very technical. So I really tried to break it down and make it in the easiest, clearest English as possible. I'm going to link some of the sources I used down below if you want to get any deeper into this, and leave me a comment if you would like more videos about KPIs. After I go through the 5 examples, at the end of this video, I'm going to speak about exactly how, what it looks like when you go over this with your client and some ideas for that. Number 1 is income sources. Many businesses have different income streams that they are, that make them money. It's not just one product or one type of client. So for example, let's say you have a piano teacher as a client. So maybe they are making money by teaching students. Maybe they're also making money they made an online class that they can sell to people outside of their area. Maybe they also do speaking engagements for other piano teachers. And then maybe they have an ebook that they sell. And then within the lessons, the first one, maybe they have group lessons and as well as private lessons. So it might be really beneficial for this piano teacher to know where are they making the most money so that they can focus on that. Maybe that ebook is really killing it and they need to work on promoting the ebook even more. So in QuickBooks, every time you see income in the bank feeds, you're going to need to have a system with the piano teacher for how to categorize it. Maybe it's obvious when it comes in the bank that it comes from a certain vendor, so they know that when it was an ebook sale. Maybe they have some kind of spreadsheet or something that tracks all those workshops they're doing, and then maybe you are actually invoicing their clients, their piano students. So, you'll invoice the Smiths and you can see, okay, this is a private lesson. Then you invoice multiple people through QuickBooks for the group lessons. So for this client on the profit and loss statement, I would actually break out those categories. And so under income, it would have all their different streams of income. And again, you can see what is the most profitable. And it's going to require a little bit of analysis too, because maybe the ebook now it was written once and now it costs no money and no time to sell it. But those workshops, maybe it is a really big time commitment because the teacher has to spend, 5 hours preparing, make a slideshow for the specific topic, and then travel and then give the lecture. So you'll want to work with your client and see, what goes into each income stream and maybe what do they enjoy doing as well. Number 2 is revenue growth. So this is a pretty obvious one that a lot of people will think of right off the bat. And the good news is QuickBooks has tons of reports that can really help you dial this down and make it really clear for your client. So one that I use a lot is comparison to last year. So you can pull a profit and loss and compare it to last year, and then it'll give you either the dollar amount or the percentage of revenue growth or decline if it is not growing. You can also break things down by quarters or by months. Just think about the data that you've been inputting into QuickBooks and what's a good way that you can present it to your clients. And QuickBooks now also has an area where you can make different graphs and things for your clients. So definitely for clients that are more visual, that could be a really useful tool for you. Number 3 is accounts receivable. So any KPIs that have to do with how much your customer is getting paid. So when they send out an invoice, how long does it take their customer to pay, to get the cash in the bank for your customer? So again, for that piano teacher, how long does it take the Smiths to get out their credit card and pay their invoice? So obviously the quicker customers pay, the better it's going to be for cash flow for the business. So as a bookkeeper, accounts receivable is an important thing to pay attention to. So again, you want to think about kind of the structure of the business and what would be the most helpful way to present the information. So maybe if it's a smaller business, you just want to be like, oh, you have 5 open invoices that are overdue. So we need to, track down those 5 customers and have them pay us as soon as possible. So it could be like that, just a number. It could be a dollar amount. You could say, we have $5,000 that is owed to us that has not been collected, and that's really impacting our bottom line. And again, you can pull these reports in QuickBooks. So you can pull aging reports, and you can pull reports about invoices and who has paid and who hasn't paid. And another way I found you can represent this and communicate it to your clients is in a ratio. So when you first hear this formula, it might seem a little bit counterintuitive, but I'm going to break it down for you. So it's just the total accounts receivable minus the past due invoices divided by the total accounts receivable again. So let's just break this down in a really simple example. So maybe the company has 4 open invoices and they're each worth $25. So you've sent out 25, 25, 25, 25, each to different customers. But one of those invoices is 2 months late. The other ones are fine. They're still within their 30 days that they're allowed to be paid, which is fine. So we're gonna not worry too much about those. But there's that one $25 one that is causing the problem. So you wanna take your total dollar amount that is outstanding. So the $100 includes all the invoices. And then subtract from that the $25 that is overdue. So that gives you, of course, $75. And then you divide it by the total amount again, so divided by 100. So then as a percentage, this is clearly 75% of all invoices are overdue, or as a decimal, it's 0.75. So the higher that decimal is, the better, because you want to have 100% of your invoices being paid on time, right? So if your client is struggling with this, maybe they're starting at the 0.75 or maybe 0.5, only half their invoices are paid within the due date. So kind of start with that as a baseline, and then from that, see if you can get that to go up. So maybe the next month it's 0.9, which is good because 90% of your invoices are being paid by the due date. So that is really going to help your clients' cash flow, and it's a way that you can really add value to their business. So it might be you as the bookkeeper that are in charge of contacting the overdue people who haven't paid yet, or you can work with someone in the office whose job that is. Number 4 is budget variance. So how close are you sticking to that budget that you wanted to stick to at the beginning of the year? So I think budgeting is a really great tool for small business owners. I have a couple of videos that talk about that. I think in my nonprofits niche video, this is what the thumbnail looks like. I talk about budgeting in that. And then also I think in my day in the life where I do bookkeeping for a preschool, I talk about it in that video as well. So that thumbnail looks like this. And I'm going to leave those linked down below for you also. And this formula is pretty simple if you don't overthink it. So it's the actual amount you spent over the amount that you budgeted and then divided by 100 just to make it a percentage. And if you take the time to put your budget in QuickBooks, then you can pull reports that's budget versus actual for your client. And it also will show it either in a percentage or a dollar amount, which is really nice too. And number 5 is labor percentage. So you want your client to take a look at how much are they paying their employees and is it the right percentage of their total amount. And the reason why this is important to track is usually labor is one of the most expensive things that you are paying for when you're running a business. And this can help you make decisions like, can you hire more people? Can you afford to hire people? Do you need to downsize maybe? And it gives you clues to how efficiently is the business running. So you just divide your total labor cost by total revenue to get this. And from the research I did, somewhere around 30% is about right that you want to spend on labor for your business. So in order to work with your client on these 5 things, I would recommend sitting down with them, talk to them about kind of get an idea of how their business is running. What are things that they're interested in looking at? And then you can also bring your ideas to the table as well, especially if you've been working with them for a little while. And then I would recommend pulling together some kind of clean and easy to read report that can track all of these KPIs for your client. Decide on how often you guys want to talk about it. Monthly is probably pretty normal. You could also do quarterly. And don't forget to utilize those graphs and reports within QuickBooks that are going to save you time. And again, clear communication is always really important with your client. So if you're charging by the hour, this is going to take longer, or if it's something you include in your fixed rate package, make sure you charge them accordingly. All that being said, this is something that really can elevate you as a bookkeeper. So you're not giving accounting, you're not giving legal advice, but you are making observations because you're someone that's really close to the books and you see them day in and day out. This can help you charge more as a bookkeeper and also gives you some job security because you're not just like a robot who's like inputting bills and paying things. Like now some apps and things can do that, but you're actually really providing value to the business. If you found this video and want to help support my channel even more, I have a link called Buy Me a Coffee, which is kind of like Patreon. So you can donate money on there to help all the free content keep coming. And if you've made it all the way to the end, please give this video a thumbs up. That helps me out a ton. All right, thank you guys so much. And again, don't forget to let me know in the comments any questions you have about KPIs or future videos you want to see. Thanks so much. Bye.